In today's video, I just want to remind you of one of the tools that I like to use, and it is the timing tool in the Dynamic Trader software. One of the things that I used for the update that I posted for Monday's session was, well, actually I took this prior swing high and I ran a report from that high looking for when we might put in a low, because the market was getting nervous. You know, we've got bombs being dropped and all that kind of garbage, and you know, the market started trading bad. But this is what the dynamic time projection told me. So I made a new report from that last high. Okay, so let's see, I ran it, and this was after Thursday, and then this is what I saw. Okay, when I clicked on the report, basically it showed me some standout timing here for the next possible low to develop. And where did that come in? Where were the high dates? Well, basically the 16th, which is Sunday, through the 18th. Those were the next highest scoring dates after Thursday. Okay, so that's one of the reasons why we were watching for a possible bounce. Even though the market looked kind of bad, we were closer to extensions as far as the lower time frame chart, and then we had these timing factors. So yeah, we're saving the histogram. And anyway, so this is what we were looking at there. So we had the timing that suggested at least a bounce, but this is what we have to look at now. I mean, yes, we have seen a nice rally off of this low, but if you cannot clear the resistance that comes in from taking some of these prior rally swings and then comparing it to the most recent swing, we could see another failure in the S&P. But just remember, if we instead can take out this same resistance, then what you have to look for potentially is a 1272 extension of that swing, and then off of this original time and price low, you would see another extension potentially to the upside. So let me just show you where those come in. As far as June S&P futures, the one target off of the larger swing comes in at 24.18, and then the target off of the lower swing comes in at this 23.89 area. Okay, so just know that if we can push through this resistance, those are the potential upside targets. Now this is what it looks like on a lower time frame chart. On the lower time frame chart, you know, you had to look at this and say, well, you know, even though there was timing at this last low, even though you did see a rally of 24.25 points, notice that this rally was not able to rally or last for more than these prior rally swings. And that's why I had these areas as possible resistance. So again, just another way to look at it. There are some traders that took the counter trend decision and took a buy against the timing. There are some of the traders that took a trend short. Well, it would have been considered at least a trend short on this time frame against this 46, 48 area. And you know, both of these decisions are still intact. Bottom line is, where you have the edge in the market is when you test these decisions. So if you test a decision and then you see a trigger or a signal that tells you it's worth placing a bet, then you can take that and then just place your stop underneath the low or the zone. In the case of the resistance, okay, we did fail at the resistance. There were sell triggers on lower time frame charts, and we did ultimately see a move down of about 16 points. So bottom line, both of these parameters had some value. Which way it's ultimately going to go, I don't know. But what I can do is give you some key decisions that will help you define risk for trades that you can take with triggers.